And welcome to Phil's Gang YouTube channel. Okay, we're going to continue our way. This is our 6th edition now to, well, let's say on our way to the market crash. So there will be no surprise. Market crash takes quite a while to happen. They don't happen overnight. So let's continue. And I want to show you some things we're starting to notice now in the market. Remember I told you that when the markets, all of a sudden what happens is when you get these peaks, the .com, housing con, the QE con we're in now, right before they peak to crash, we start seeing buyers coming in that we never had before. And we had, and like here, .com. But look, we had an increase in buyers at the very end as the peaking that we never had before. These people all coming at the wrong time. And that's a real sell signal. Look at this. We've never seen. Our volume, our amount of buyers have more than doubled. That is scary because they're all wrong, okay? That's when you know they're wrong. When the consensus is, hey, I got to get in and start buying now, man. I haven't been in the market in 13 years. Now I'm going to make a lot of money. I'm going to buy Tesla. I'm going to buy Facebook. But I'm getting in the market. That's what you got. That's crazy. Now, what we're thinking at this point is, if you go and look again, and remind you, we had an oversold condition on the .com of 155% just a few days before it crashed. We had 158% oversold condition on the housing con right before it crashed. We're reaching 200% on top of this incredible volume of new people coming in. What are you, nuts? Also, what you got to remember, when you start seeing the market, when it's rallying like it is, all because of QE and stimulus. Stimulus is a bunch of crap. Stimulus doesn't stimulate anything but for stocks to go up artificially. It doesn't help the economy, doesn't help jobs. Stimulus is garbage, okay? It's just to get the stock market to go up. But what that has created now, we're starting to see coming in more and more inflation. How do we know that? Treasury yields are going up. They're continuing to climb. Every week they're climbing. When treasury yields go up, that's a bad sign. That's inflation. That means people are paying more for stuff. But guess what? They don't have any more money because they're not getting raises because there's no business investment. Everybody, all the CEOs are taking the money for business investment. Instead, they're buying their own stock back, okay? So what we're watching now, we're getting to that pattern where inflation turns to deflation. That's where businesses and companies all of a sudden have to drop their prices, because when prices inflate and people don't have any money and they got all this debt behind them, they stop buying. So then companies and retail customers, the retail sales start cutting their prices, thinking they'll boost business. This happens with every crash. And so now once we turn to deflation and they cut their prices and their business doesn't go up, guess what happens next? They get rid of the jobs, and that's when you get the crises. That's when you get the crash. This is what we're starting to see right now. This section here, inflation. We didn't see it before, but now we're starting to see it because we're seeing that treasury yields starting to increase. We're also seeing red flags. Treasury yields, as I just said. Okay, treasury yields are going up, and we're starting to see that that's happening every day now. We're also starting to see Americans are struggling to pay their energy bills. Yes, you notice that? Energy bills. Also, PE ratios for stocks are too high. Business investment is too low. Productivity is decelerating. We're seeing every sign that we saw in the other two crashes accelerating here. Income inequality is really getting worse and worse every day. And every time we see individual stocks rallying, we're seeing less volume. That's right. Instead of more volume, we're seeing stocks go up on less volume. That is very dangerous. So what we basically got here is this. We had all the rate cuts starting back with Obama, 10%. That pushed the market up. All this behind us is now in the rearview mirror. So think of this as the anchors. Here they are, printing money, Fed, and there's monetization day, holding it up. Printing, QE, okay, zero rates. They're printing money to buy treasuries that drop rates down to zero, hold the market up. Stock buybacks, that's the big one, hold the market up. Unbelievable. No profits. No profits at all. No earnings, nothing. Then, as things are getting tired, they had a perfect time. Everything was perfect. When they had the COVID-19 coming in February 2020, everybody celebrated. Wow, because the market was going to crash anyways. It was just a trigger. It's not why the market crashed. It was the trigger to the crash that was already coming because everything we just talked about. But it happened, and now they put in $7 trillion, the stimulus, and last year was 5 trillion. Add 2 with now that they just approved. That's 7 trillion to push the market up. The national debt is at 27 trillion plus another 100 trillion unfunded. So what's happening is every time they do a stimulus, the market goes up. Then when they stop the stimulus, the market stops. And then the market flattens out, waiting for another stimulus. While we have inflation going up, we're going to have deflation. It's like being on a teeter-totter. Like every time they wait when the market doesn't have an announcement of stimulation, the market pulls back and holds until they get another announcement of stimulation, then it pushes it back up. This is crazy. So at the end of the day, what we're going to see here is, again, the crash, and it's going to look like this. As I said, it's going to look similar to this, the crash, but we're going to simplify that crash because with my color-coded technology, hopefully I can point out to you when it's exactly going to crash and when they're selling and when they're buying, and instead of what we see this situation where everything's always green. See here how this is red? This tells me when to sell and when to buy. Here, you see, it doesn't do that. No chart does that. My chart does. And look at here, same thing. Look at this. It tells you when over here. It doesn't tell you when to sell or when to buy. It tells you exactly when to sell. It tells you exactly when to sell. You're going to know exactly when to get out of this market. I promise you. You're going to know exactly when to get, whether you have my charts or not. Okay, that's fine. You don't have to buy them if you don't want them. But I'm telling you right now, we're getting closer and closer. They are depending on stimulus right now. This whole thing is stimulus, and everybody stopped. They're not putting any more money in the market, waiting for another stimulus. And then it comes, boom, it's going to go. So as long as they keep coming with stimulus, the market will keep going up. No question about it. But they're going to start running out of those. But I will make sure that you know when that time comes, and we'll be ready to get you out, and we'll be ready to get you into some shorting. How's that? Remember, philstake.com. Please take this and ask people to subscribe, and please hit like. And please listen to my radio show every day at 3 p.m. Eastern on my YouTube channel. All right, I'll see you on the charts.